the shareholder was questioning the management, they were scolding the shareholder. So the current management is more shareholder friendly and focusing on capital return back to the shareholder. So I think most of you actually have watched the video. Okay, for those who have not watched, I do encourage you guys to go and watch it to understand more. Okay, then you see Jatin Matheson also did share buyback. They bought back about 21% of their share count, so they reduced about 20%. Keppel also divest all the asset heavy business and focus on asset light. Capital investment also, they divest the development business and they are moving towards asset light. Wilmar, they spin off their consumer business to unlock more value, and also Hong Kong Land has been buying back shares and reduced 5% of the share count. And recently, Hong Kong Land just announced that they're going to exit the capital intensive business and focus on asset light model. Okay, so we can see that because of a lot of this initiative, right, we can expect the PB average, right, of the Singapore Stock Exchange, right, to move forward. So I'm quite bullish or quite positive about the Singapore Exchange moving forward in terms of the STI index, because a lot of the STI index are moving towards asset light model, okay, which is very good. Okay, so if you have listened to last year's video, all right, we did a video talk about why did I bought this company for my aunt. Okay, at that point of time when I bought for my aunt, right, I feel that the rate was the risk reward ratio, right, was very high for Hong Kong Land. So I decided to buy for my aunt and I concentrated for her for this thing. Okay, and since in this video, if you see, right, I told you that the net I discounted a lot of the asset yet the value of Hong Kong Land is $6.15 US dollar, and the share price is still traded at $3.60. So that time, I tell you, it's really a risk reward ratio is very, very high. So if you have literally 1 year to look at Hong Kong Land, right, from 360 when I share, right, it dropped all the way to as low as 280, right, and after that it bounced back. So your return, if you have bought at the point of time, should be between 33% to 43% in a year. Okay, and at the point of time in this video, I also talk about, it's all about being paid to wait. So my aunt is being paid to wait for the property cycle to come back only. That's all. Okay, but of course the catalyst happened early in this case, and my aunt only wait so long. Okay, and how many of you actually attend the Alpha Quadrant premium training for the valuation part one? How many of you actually attend? If you attend, type me in the chat. How many of you have attended the Alpha Quadrant premium training for valuation? The topic is valuation. How many have attended? If you attended, type me. How many of you? Okay, so Christopher attend, Evan attend, Wayne attend. So during the Alpha Quadrant valuation method, I teach about risk reward ratio, right? I teach about how do you calculate the risk reward to take asymmetrical bet, right? So a lot of you attended. Okay, so if you see the risk reward ratio, right, at that point of time, you remember I got do Hong Kong Land ratio, right? So this was the Hong Kong Land's valuation at that point of time, and I told you that you are risking at the point of time the share price was $3.21, right? If the thing goes into bad case, you at most lose 23%. But if it goes to the base case, you're up 70%. If it goes to the bull case, you're up 163%. So your risk reward ratio is at least 3 times to 7 times based on base and bull, right? How many of you actually saw it? So you literally got 1 year, and I go through the last year webinar, I go through the valuation, right? You got all this 1 year to look at Hong Kong Land. If you have never bought, I really cannot say anything already. Okay. So some of you may not have attended the valuation is because it's a progressive yearly we conduct. So if you have missed it, don't worry, because the next one will come again. Okay, there's no replay for it. Okay, we go as it goes. It's an additional extra training that I conduct at least 2 to 4 times a year to give you more in-depth or specific topics in the Alpha Quadrant. Okay, it's an additional thing that we never tell you, but we just give it to you guys. Okay, so you have to wait for the next one. The next one is next year already. Okay, so like I said, the thing play out and the share price move up. Okay, and the value upside was like, I'll tell you, at $5.46. So right now it's very close. It's still moving up. Okay, I think with the asset unlock and all this, I think chances very high they may hit the bull case scenario. Okay. Okay, so let's look at the valuation of STI valuation. So STI valuation right now, you see, you can trade above the average PB. But in fact, if you look at a lot of their companies, a lot of their companies are already going to turn into asset light. So actually the average PBR will not be 1.161, will move up higher in terms of averages. So I think in general, I think Singapore market is generally just fair, okay, but got positive to go back upwards. Okay, so that is my take on the Singapore market. So I'm quite positive of the Singapore market moving forward, but I'm quite cautious about the US market. Okay, so next, let's talk about the Hong Kong market. Okay, so the Hong Kong market, if you see the China stocks and the Hong Kong stocks recently, before all these stimulus came out, the market is already recovering already. Okay, but these stimulus are a major boost to the market. Okay, you're going to see before the stimulus came out, the Hong Kong markets is already recovering already. Okay, so you can see they got up, then they hit a bit of the resistance here, and then now they go down, but it's okay. Okay, so if you look in terms of their average, it's about 11.5. They're still slightly below average. Right now it's about 10.5. It's not expensive, okay, and I would say it's still cheap for the Hong Kong market, and there's still more companies investable in the Hong Kong market as compared to the US market. So I think in general, I'm very positive of the Hong Kong market and the Singapore market moving forward. Okay, so right now let's talk about interest rate. Okay, actually I'm not going to talk about election, right? Because the election result already came out. Trump win. Okay, today the result came out. Trump win already. Okay, but to me, whoever win does not matter. That at the end of the day, is finding the right company. That's all. Okay, and US election most of the time tends to do well, except unless got major crisis. If not, most of the time it's just do well only. Okay, so right now you can see they just dropped 50 basis point. Okay, so I don't expect the interest rate to go back to zero. Okay, unless something drastic happen. So I don't expect the interest rate to go back to zero. I think moving forward, a more possible normalized interest rate will be between 3 to 4% moving forward. I'm guessing that. Okay, so if you were to ask me which sector will benefit, in fact, I will tell you all sectors will benefit. Okay, unless you're telling me the interest rate dropped to 0%, then there's a chance that only certain sectors will benefit. But in most cases, right, I feel the drop is not that drastic. It's just normal. So when it drops, I think every companies will benefit. Even the banks also benefit, because now, because of the high interest, right, the banks' loan growth, right, actually slow down. With the interest rate start to drop a bit, or normalize to 3 or 4%, their loan growth will start coming back, because now their loan growth is about maybe high or mid single digit only. Okay, but with interest rate drop, maybe they can go to low double digit. That's a possibility. Okay. So instead of focusing on interest rate, focusing on election and all this, right, the most important thing is, right, you must learn how to structure your alpha portfolio moving forward, so that regardless of interest rate, regardless of election, your portfolio can also handle all this kind of scenario. That is the most important thing. And that's also the thing that we have been teaching you in Alpha Quadrant. Okay? Okay, so let's moving forward. Okay, so but before I going to go through how you should structure your alpha portfolio, I want to spend some time talking about how do you manage risk, how do you look at risk and reward. Okay, so when it comes to investing in the stocks, right, you can see a lot of people keep talking about how much they can make out of this company. Okay, and I can tell you, right, that is the wrong way, right, to look at investment. Okay, so instead of looking at upside, right, you should be looking at how do you manage your risk, manage your downside. Do you agree with me? If you agree with me, I want you to type yes in the chat and let me know. Sorry, I have to take a few breaks now because of my throat. I need to drink some water. Okay, so I think it makes more sense to manage risk. Okay, and I'm going to show you an example. Okay, but before I show you an example, let me give you an analogy. Okay, so let's say, for instance, I make a bet with you. Okay, I say if you jump off this building, you're going to get $1 million. Will you do it or not? Will you do it? You won't do it, am I right? Because what's the point of getting $1 million where you got no life to enjoy? Because when you jump off the building, definitely you will die. Right? So what's the point of getting $1 million? So investing in companies and just by focusing on looking at the upside is exactly like how this feels like, Right? You look at the upside, you look at the gain, but you never manage the risk. You just jump off the building. Right? So, and you permanent loss your life. Right? In investing, you permanent loss of capital. Okay? So you should not do that. Then you should think of way, how can you still manage the risk and still get the $1 million? Okay? So instead of jumping out of the building, you can abseil down the building with the rope, right? Or you can parachute down the building, right? As long as you reach the ground floor, you get your $1 million. Okay? But is there still risk when you abseil down or parachute down the building? Is there still risk or not? Yes or no? Type in the chat. Is there still risk if you were to abseil down or parachute down the building? Yes or no? Type in the chat, huh? Yes, right. Your rope may break. Your parachute may got a hole. Okay, but there is low probability that it will happen. But it still may happen. Okay, but at least you manage your risk, right, to get your $1 million. Okay, so what I'm trying to tell you is, right, I'm teaching you is that there's no such thing as no risk. In investment, you always have to take risk. I'm not telling you not to take risk, but I'm telling you to take risk, but you take calculated risk. You need to make sure that your risk is manageable for the possible upside that you're going to get. Okay? So if you do this consistently, you will definitely keep hitting jackpot one. You'll keep finding companies with minimum risk, high return, asymmetrical bet, right? So do you remember in the Alpha Quadrant live webinar, right? I talked about when is the best time to buy stocks. So when is the best time? What's the two scenario? The two scenario I talked. Okay, what's the two scenario that I talked during the Alpha Quadrant live webinar? When's the best time to buy stock? Type in the chat. I want to see your model student. When is the best time? Mervin said you can take lift and stairs. Yeah, you can take lift and stairs. But you may also fall down the stairs, right? If you run too fast, right? Right. Bad news, right? Market crash or there's bad news on the company. That means the company got temporary pessimism. Temporary pessimism on company. Okay, so two criteria. Market crash, first one. Second one, temporary pessimism of the company itself. That means there's some events that happens to the company that give them temporary pessimism. Okay, so let me show you an example of the investment that I invested for my own portfolio. Okay, and how did I look at the risk and reward? Okay, so let's take a look at this company called Pico Far East. Okay, so if you look at Pico Far East, this business, this company is in the business of exhibition. Okay, 83% of the revenue is created from exhibition. So when the COVID pandemic happens, right, straight away their share price tanked 64.7%. Okay, because everything locked down. People don't know whether the exhibition going to come back. The risk is the highest at the point of time. Okay, but did I buy over here? No, I did not buy because I don't know how long will they take to recover from the COVID. And I don't know how long China will recover because majority of the business is in China. Okay, almost like 80% in China, 20% in Southeast Asia. Okay, but I don't know how long they're going to survive. Okay, so I did not take the risk here. Okay, but you can see the share price recover over here. The share price recover here because even during COVID pandemic, they managed to make profit China managed to come back very strong, and they resume event even before the rest of the world. Okay, and this company still pays dividend. They just reduce the dividend and they increase the dividend. So why the share price increase? Because it shows that the earnings actually increased back. Okay, but they did not increase back to the 2019 figure, but they just shows that it drops and increase. Later I'll show you. Okay, so when did I buy? I bought in 2022 around here, around July. Okay, so what happened is that this company already showed recovering sign, already recovery. Okay, so my risk is reduced. This is the first thing. Okay, the second thing is they down because of the China sentiment very bad. So you don't care whether you are just focusing on Hong Kong, focusing on China or what. As long as you are in Hang Seng Index, all stocks drop. And also 2022 was a stock market crash for not only in Hong Kong but also in the US. Okay, so they dropped back down to about $1.13. Okay, which is very close to the low of about 0.88. Okay, so at $1.13, I decided to invest in this company because I think that they already recovered and the situation is temporary and the valuation is just right, was very good, and the risk reward was very high. Let me explain to you. Okay, so now let me go through step by step, right, using how I did that time, the investment, looking through my eyes. Okay, so if you look at Pico 5 at that point of time when I see, right, was that, okay, this company have a history of increasing revenue, up, down, but on the uptrend. Okay, but because of COVID, they dropped, and after they slightly recover in 2021. So at 2021, this was what I see. Okay, and when I look at the profit, I see, wow, okay, 2019 they are about 257 million. Okay, they dropped to, but yet still profitable, still pay dividend but reduce. Okay, very good, right? And on top of that, right, they actually recovering. So I didn't buy at the peak of the COVID pandemic. I buy when the sentiment was down again and they dropped almost close to the COVID pandemic. So, and they already recovered. So there's already proven track record. Okay. So the margin was very stable, right? The one that really affect them is the net margin. Okay, which I expect they will go back to their net margin of between 5 to 7%. Okay. So when I look at this company, I think that the probability of them going back to the margin of 5 or 7% is very high. So that's why I decided to bet on them. Okay. And if you look at the track record of cash flow, right, they are always positive cash flow. Okay, only 1 year is negative free cash flow, very mild, but most of the year are positive free cash flow. On top of that, if you look at the cash and the debt, right, you can see over here, based on the first half 2022 result, when they came out, the cash was about 1.3 billion, right? The debt was about 0.7 million, right? The net cash is about 0.6 million. That means the cash minus the debt. So 600 million in terms of the cash, right? Net cash, okay? And the market cap at the point of time when I bought into this company was about 1.3 plus billion. So the net cash is actually 43% of the market cap. 43% of the market cap is actually net cash. That means this company, I know, very hard to bankrupt. The risks are further reduced for me, okay? Then I look at the dividend payment. Wow, this company, the dividend consistent pay, but because of COVID pandemic, they cut, and they reduce, sorry. But then they still can maintain, and they're increasing at 5 cents. Okay? So let's say at 1.13 cents, based on 5 cents, I'm getting 4.4% dividend yield. So while I getting dividend, it further reduce my risk because I got money come back. Right? And I'm being paid to wait for recovery of this company, and which is already show there's recovery already. Right? But because of sentiment, the share price just tank only. Okay, but in fact, the earnings already got recovery already. Okay, so this one further because of the dividend, it further reduced my risk again. Okay, and if the company were to go back 14-cent dividend, based on $1.13, my yield on cost is almost 12%, 12% dividend, Okay? So can you see up to this point, right? I did not even talk about upside. I just keep talking about managing the risk and how my downside is protected. Can you see that or not? If you can see that, type yes in the chat and let me know. Can you see that or not? Yeah, I keep talking about managing risk. All right, type in the chat. Do you see that? I didn't talk about making gain. I talk about managing risk. Okay, so let's look at that point of time how I look at the company. What is the risk reward? Okay, so I calculate, right, the worst case scenario, their price to book value was about 1.75. So the worst case scenario during 0809, right, they dropped about 0.5 book value. So let's say 0.5 book value of 1.75. Right? The one of the lowest I can go is about 88 cents. Okay, so that was the value I have. My downside, my bear case scenario, 88 cents. Okay, and I don't talk about they go back to their previous peak. I just talk about they go back to 2019 profits. So 2019 profit is about 256 million. So if you divide it by the number of shares at that point of time, right, it's about 20.7 cents Hong Kong dollar. And I look at their, before 2019, their traded average, right, PE is about 12 times. Okay, but let's say I conservative. I give discount. 10 times. So I took 10 times multiplied by 20.7 cents. It give me about $2.07. Okay, but do remember their average was 12 times. I'm being very conservative, and I just go back to pre-COVID that profit. I never go back to their record high profit. Okay, so if it goes back to 12 times, actually the reward is higher one. But I'm being conservative over here. So when I'm being conservative over here, you can see my risk reward is already 3.76 times already. Okay, so that means my base case scenario are already more than 3 times already, which is exactly same as Hong Kong land. And I tell you the risk is 88 cents. But do take note, you don't forget. Just now I told you 43% of the market cap is cash. So actually this risk is even lower. It's not that high. Okay, but I just tell you based on conservative calculation, it's already 3 times. If I'm not so conservative, my risk reward is even higher. So my probability of winning is very high, but there's still risk, right? So that's what I set back for. Okay. So let's look at what I've changed since my purchase. Okay, so I purchased from here. Since then, I've received dividends of 6 cents in 2022, 9 cents in 2023. And recently, right, first half 2024, right, they announced that they resumed back their interim dividend. Okay, before that, they always have interim and final. But because of COVID pandemic, they only announced final. So the first time they resumed back their interim dividend, right, my forward dividend is 14.5 cents. So let's say this coming full year, they give back the dividend. My yield on cost is going to be 12.8%. Okay, 12.8%. Can you imagine? I'm going to get 12.8% dividend moving forward. And I can guarantee you, the moment they announce the dividend, same as last year, let's say 9 cents, the final year one, which gave me a 14.5 dividend, right? The share price will shoot up, man. Definitely. Okay. So based on the first half dividend I got, the 2022 dividend and 2019 dividend, my cost price of 1.3 cents, right? Plus total dividend I collect about 20.5 cents. My gain, right, for just holding 2 years, CAGR is about 40.5%. My annualized return is 40.5% CAGR. Okay? So don't forget, I told you they also have result came out. So recently, their first half result came out here. Just came out. They up 89.6%. So that's why I told you my probability of getting the 14 cent dividend very high, because recently their first half result came out, they up 89.6%. So their trailing 12-month profits is already surpassed the pre-COVID profits of 256 million. The trailing profits already 318 million already. Literally surpassed. So if based on 318 million, multiplied by, let's say, I go back to average 12 times, my intrinsic value can go as high as $3, So that means if next year everything succeed and they go back $3, I probably sell. So in 3 years, I more than triple up my earnings already. Okay? So with this good result, my risk is further reduced. So now I'm just waiting for the right valuation, right, to exit this company only. Okay? So if you can see how I manage my risk based on my purchase risk reward, right, just type yes in the chat and let me know. Okay? So you see this how I look at risk reward, look at things and all this. Okay? Okay, so this is one way how you can, look at risk and manage and buy into distressed asset at low valuation. Okay, this is how I do it. Because I love to buy into distressed assets. Okay, Rusmin like to buy into compounder. I like to buy into distressed asset. Okay, distressed asset will give you higher returns. Okay, but it require a lot of work and it's very tedious and you have to consistently look for it. So you buy based on a 3-year horizon, just like property, right? You buy based on a 3-year horizon, you flip the property and you buy another property, 3 years you flip. So distressed asset is also like this. I buy based on a 3 years horizon, I flip. But the returns I get is much higher as compared to the compounder. But compounder, you also can get higher returns. Okay? So it's just that this one is more active way of investing and it's more suited for my style. Okay? But of course, there's another way that you can lower your risk, right? Instead of following this way, there's also another way to lower your risk, right? Because I buy into distressed asset because every time when the asset is distressed, most of the time the valuation very low, the risk is lower, okay? But there's another way to lower risk is to buy into quality company, which is what you have learned in Alpha Quadrant, right? Especially during crisis time or during bad temporary issue of the company, right? You buy them, quality company at good valuation, right? And you hold it long term, right? You don't need to do so much work. It's all about waiting, you know. So at the end of the day, right, when you invest in quality companies, right, you want to sleep soundly, you want to sleep peacefully, right, and let your money compound. Okay, this method is much more easy method as compared to the method I'm doing, which is distressed asset, which I always have to consistently look for ideas, a lot more work, right? Right. But of course, the return is higher because I'm more actively looking for companies. Okay. But if you look at quality companies, right, your work are less. You just need to have a list of watch list company, right, and wait for the right price and just buy. Okay. So right now, I want to teach you how to look for quality companies, a refresh of Alpha Quadrant, how to look for quality companies that are recession proof and interest rate proof or even election proof. Okay. So I just basically do a quick 7 criteria to give you a refresher. Okay. So if you follow this method, right, which is already taught in Alpha Quadrant, it's a refresher to you, right? You are being prepared for possible crisis, right? Possible interest rate, possible post-election environment. Okay. So the number one is, right, you want to find companies and you want to see in the past how have all these companies performed during the past crisis. Okay. So what I mean by during the past crisis, Marcus says something wrong. Can you all hear me? Can you all see or hear me? Is there something wrong with the webinar? Can you type in the chat and let me know? Okay. So nothing wrong. Okay. I thought suddenly the webinar cut. Okay. So let's back. Okay, where's my chain of thoughts? Can't remember where did I say it. Okay, let me think about it first. Okay, so we need to see how the company performed in the past crisis. Okay, so first thing you need to know what's the different crisis point. That's the most important. Okay, so let me give you a bit of the glimpse of the market crash timeline. Okay, so you have your 0809, so that's the one crash. You have your Euro debt crisis in 2011. You got your China stock market crash in 2015, 2016. You have your US trade war in 2018. You have a COVID pandemic in 2020. Okay, so these are the timeline of crisis. Okay, so when I look at crisis, right, anything drop more than 20%, it means bear market. Okay, so that's how I look at it. Okay. Okay, so you all say there's a hang a bit. Okay, I hope it's not hang now. Okay, so you need to see what is the level of recession proof for in terms of their revenue and their operating income. Okay, I'm going to use operating income because it's easy to look at and because it's before all those exceptional items. So I use that quick and dirty way to look at it. Okay, so I'll look at revenue and operating income. Your operating income basically is your EBIT. Okay. So I will see what's the level of recession proof. That means during the recession, how have their revenue and operating income dropped during recession? Right? If they just drop less than 10% from the previous year, I think they have high level of recession proof. Okay, if they drop 10 to 20%, I would say they have mid level of recession proof. Okay, if their revenue and operating income drop more than 20%, I would say there's low level of recession proof. Okay, so the level that we look at is this first two. Okay, less than 10% or 10 to 20%. Okay, that's okay. Okay, so let's look at this company called Costco. Okay, I think all of you know Costco, supermarket business. You pay membership, then you can go in, then they give you lower cost every year. Okay, so that is basically a business. Okay, so if you look at Costco, the track record, so this is the revenue, consistently increase, So let's look at the different crisis point and see how have they performed during the different crisis point. So in 0809, right, they only dropped by 1.5%. Okay, 0809, they dropped by 1.5%. But the rest of the other crises they are increasing even during COVID pandemic. Okay, so you see this company regardless of crisis or no crisis is very recession proof. That's why this company, right, Charlie Munger said his top 3 company invest, right, this one will be one of them. Because regardless of what, this company can just continue compounding. Okay, let's look at their operating income. So we know revenue is resilient. Let's look at their operating income. Wow, operating income also just dropped only 11%. Okay, so quite high level of recession proof. Right, the rest of the other recession, they are increasing positive, So that means this company, right, if you bought into Costco at the right price, you no need to care whether recession or no recession. You just leave it out there and just let it compound for a long time. Your wealth just increase only without doing anything. Because this company can just keep growing and growing, increase the membership. People will just buy the essential, they just increase the price. That's all. Right? Do you agree with me? That Costco is a very, very strong business because there's very, very less moving part that can affect this business. Do you agree? If you agree, type yes in the chat and let me know. Okay, do you agree? Okay, so very clear cut. Okay, so let's look at another business. MSCI, basically the index. So if you are a fund manager, you want to get the index data, you must pay them, right? The MSCI World Index, any index you want to get the ETF, right? The data you have to buy from them. So they go by subscription. It's very recurring. Okay, so we look in terms of revenue, right? Wow, increasing. Okay, let's look at all the different crisis points. Wow, never 1 year negative. This one even more best than the Costco. They continue increase in terms of the revenue. So very recession proof. You don't care whether COVID pandemic, you don't care whether post-election, you don't care whether interest rate, they just increase the revenue. Let's look at their operating income. Wow, even best. No down year, right? So you buy into companies like MSCI, you buy into companies like Costco, no matter what, nothing can affect them, right? As long as they stay in business, no war. War is, I think, the only one. No war, nobody whack US. This company will always stay in business. Do you agree with me? If you agree, type yes in the chat and let me know. Right? And do you like MSCI business? Type in the chat and let me know your thoughts about MSCI also. Okay? Okay, so next is step number 2. Okay, a quick refresh. We want to look for recurring business. Okay, why we want to look for recurring business? Let me explain to you again. So if you go to Alpha Quadrant, right, I tell you, right, it's very hard to grow non-recurring business. Because non-recurring business, right, you have to consistently look for new customer, right? So when your business grew until a certain extent, right, if your business is small, you keep looking for new customers, okay. But as you grow bigger, it's very hard to keep looking for new customer. So that's why companies like construction companies grow 10 million to 20 million is okay. You have to grow from 10 billion to 20 billion. It's very hard. That's why they are very volatile because they have to consistently look for new customers because the old customers don't come back to them. But whereas you look at recurring business, right, the existing customer every year will come back to you, right? On top of that, every year you stack new customer. So which one is more easy to grow their revenue? Is it recurring business or non-recurring business? Type in the chat. Which? Which business is more easy to grow their revenue? At the end of the day, right, we want to buy into a company that continuously grow their revenue. If not, if the revenue don't grow, it's very hard to grow the profits, right? Besides like your pay don't grow, right, it's very hard to increase your savings. It's easier to grow your pay to increase your savings than keep cutting costs. There's only a limit to cut the cost. You agree with me, right? So you guys know it's easier to grow for recurring business. Sorry, my throat a bit pain. Okay, so let's look at the level of recurring. Okay, so I told you, right, low level recurring are all less than 49% at low. So low level, right? Mid level is between 50 to 70%, and high level is between 71 to 100%. So for alpha quadrant, we want to look at this range, right? 50 to 100%, this range. Okay. So how do you look for recurring? Remember, in alpha quadrant, I also teach you, right? You go and look at the segment, the segment inside the management discussion, or in the Asian annual report, you go to the segment information and you go and look at the business itself and you say recurring or not recurring. Okay. So if you look at, for instance, MSCI, right? They already at the segment recognition already tell you that the business is recurring subscription. Over here you can read, right? And they got the asset-based fee, which is also recurring. So you can see from here, they already say that 97. If you go and see the data, right, actually 97% of their revenue is recurring in nature. It's subscription for the ETF, for the data, right? As long as they want to build the ETF, right, they have to pay them money. They want to build the ETF modeling after MSCI World Index, they have to pay them the money, right? Right. So it's like that. So you can see from here, this is how they make their revenue, right? 96% of their recurring revenue. You can see 73% is recurring subscription, but 96% recurring revenue. So from here, you know the business is recurring. Okay. Then let us look at Costco, right? So Costco, very clear cut. You buy essential, right? And on top of that, they got subscription over here, you can see. So the essential is already recurring because the thing that the consumer buy, right, is all daily stuff, right, which you always buy. On top of that, they subscribe to the membership, right? Once you subscribe to membership, you will spend more on, trust me, okay? And that is recurring, okay? So you look at Costco, I don't need to ask you already, 100% recurring. Do you agree with me? It's 100%, right? As simple as that, okay? So once you look at first one, whether how recession-proof they are. Second, you look at recurring. Third, you want to look at revenue growth, okay? You want to look at revenue growth at least 5%, right? The company must at least can grow 5%, okay? That's what I'm looking for, okay? So why look at revenue growth instead of profit growth, right? You remember I talked to you, right? Just now I tell you, right? It's easy to grow you want to grow your profits, right? You grow by increasing revenue. If you grow your profits by cutting expenses, but your revenue don't grow, right? There's always a limit that you can cut. It's exactly same as your pay. If your pay is 5,000 and you want to save 4,000, right? And you just want to spend 1,000 every month, right? And you want to increase to, let's say, 4,500 saving, right? There's always a limit that you can cut. You cannot cut more than the limit, right? So instead of focusing on limit, you must focus on companies that really can grow revenue. If the company cannot even grow revenue, then it's going to be a very hard business to grow. Why you want to focus on that, right? So that's why every time I tell you, when you do the screen, right, you must screen companies must grow at least 5%. Do you agree with me? You agree, type yes in the chat and let me know. Do you agree with me? Okay? So I can tell you, it's not easy for business to keep growing revenue. So when company can grow 5%, I think it's good enough. Okay? So let's look at Costco and the MSCI. So you look at Costco and wow, long-term 15%, 8.8%. 10 years CAGR, 8.5%. 5 years CAGR, 10.8%. Okay, the 5 years CAGR is higher because of COVID pandemic. A lot of people stock up. That's why they're growing very, very fast. Okay, so for my take is I think Costco, over long term, 8% is achievable. 8%. I think it's achievable. Do you think 8% is achievable for Costco? Type in the chat. Do you think yes or no? It's achievable? To me, I think it's achievable 8%. Okay, better than our benchmark of 5%. Okay, but 10% I think unlikely because the 10%, like I told you, is because of the COVID boost. Okay, other than that, I don't think that much. Okay. So let's look at MSCI. Okay, so MSCI, wow, 15 years already 12%. 10 years about 9.8%. Recent 5 years about 12%. Okay, so I think MSCI maybe 10% over a long time is possible. Okay, for the next 10 years, right, I think I still can see MSCI growing at 10% because now a lot of people are going to ETF, going to index, right? So I think it's easy, it's still easy to I'll say I think you still can grow at 10%. Okay. For the next 10 years, I still see that. But the following 10 years, whether you can maintain, maybe they'll drop 8% or what. Depends on how many people are already in index already. Okay. But my take is this. Okay. Yeah. So revenue growth. The fourth thing you want to look at is how high is their high return on invested capital. Okay. So remember I told you to buy into asset-like company. All right. So that is how we look at return on invested capital. Okay. So like I show you already before the data, right? Asset-like companies, right, will always outperform asset-heavy companies in all their different specific industry. You can see all the asset-like company in all the different industry outperform the asset-heavy. So no need to go and look at asset-heavy unless you're looking for dividend. If not, right, if you are looking for growth, right, just direct go to asset-like companies. Okay. And how to calculate the return on invested capital, I already teach you in Alpha Quadrant. So just go back and learn. I'm not going to teach you the basic here. All the basic, right, is already inside Alpha Quadrant. Go and listen. Here, I'm just going to drill you concept, do a general reminder to you. Okay. So if you look at Costco, right, their ROIC, right, is consistently above 15%, right, or in fact above 20%. Okay. So they literally pass our criteria. Okay. So the best one I feel is consistently above 20% or more. Okay. And sometimes a company can, like MSCI, can be consistently above 100% on. That means they are super asset-like until they no need capital to grow on. They just grow like that. Okay. So that is basically your asset-like companies, which you look at the higher ROIC, at least 15% above. Okay. Then finally, when you look at the company, right, when you do quick filter, you make sure that they have manageable debt. Okay. And how do we look at manageable debt? So as long as the company got more cash than debt, right, actually no need to do this ratio already. Cash, debt to cash flow ratio. But for the sake of this, I'm going to do. Okay. But if they got more debt than cash, right, then you do the debt to cash flow ratio. Right. So the debt to cash flow ratio is to help you to buffer for make sure that they don't over leverage. You can buffer for high interest rate environment. Manageable debt also good is because you know that they won't get bankrupt, they won't go into financial issue. Okay, so you don't want to invest in companies with debt problems. Okay, so if you look at Costco, all this, right, their debt to cash flow ratio, the latest one is 0.5 times. So within the year, cash flow can already pay off the debt. So this company will never go bankrupt. Okay, same for MSCI. MSCI generally still on they have been reducing, like you can see, about 3.6. Okay, so our benchmark is about 5 and below. Okay, so because the company don't have much debt, right, they can take the excess money and return back to shareholder, or they can return, do share buyback instead of keep using it to pay down debt. Right, so I like to look at this kind of companies. Right, so if you look at the Pico 5, right, you can see when I look at Pico 5, the cash is more than debt. So that reduces my risk. As long as the cash is more than that, I feel it reduces your risk further. Do you agree with me? If you agree, type yes in the chat and let me know. Do you agree? Yeah. So you look at example, WeWork. Wow, this company, they just grow only. They just grow with that, with raising capital. It's crazy because I went to one of the WeWork office. They held a party out there at, I think, Suntec. It was crazy. It's not like an office. Everybody's just partying at the office. It's basically they're trying to market this way. Then they spend a lot, So you look at their debt is piling up. Their cash flow is negative. No cash flow, how to pay debt? So eventually this company went into financial issue. That's why they have to file for bankrupt and restart again. Right? So we don't want to buy into all this kind of debt high company. Okay? Because you buy that company, you sure go into financial issue one. As long as you avoid all these high debt company, your chances of winning and your high and reducing a risk is very, very high. Okay, so you want to do that. It's all about reducing your risk, right? Can you see that I keep talking about reducing risk? It's not about the gain. It's all about reducing the risk. Okay, and finally, you want to invest in companies that is in tier 1 industry. So when you invest in tier 1 industry, your risk also further reduced. If you invest in sunset industry, headwind industry, right, like the aeroplane headwind, it's going to be very hard for the aeroplane to fly. You don't want to do that, right? So, for instance, what are some of the tailwind industry? For instance, the digital ad spending is going up. People are spending advertising on digital, social media, Google, Facebook, right, TikTok. If you want to invest in television business, newspaper business, you're going to be very hard. You're fighting against the wind, right? Don't do that. We want to go. We want the wind to help us. We want the wind to help propel us forward. We don't want the wind to fight us. We go with the flow, right? We go with the tailwind. Okay. So if you look at e-commerce business, right? So e-commerce business just in the US itself is only 15.9% of the total retail sales in 2024, right? So that means if you look at e-commerce sales, there's still a chance that e-commerce can go up to 30% or 40% of the total retail sales in the US. This is just a US figure. I'm not talking about the world. The world figure is even lower, except for China. China is higher, but the rest of the world is lower. Okay, so that means e-commerce sales is still very high. And you look at Costco, their e-commerce sales, they are building an e-commerce arm for their consumer product. Just recently in the quarter 4 result in September, they up 18.9%. So their e-commerce is growing. It's also another growth driver. It's a tailwind industry. They are not only retail, they are also in e-commerce, and it's also going up, right? So you know that they are not being disrupted. Okay. So if you look at MSCI, it's the same thing. MSCI is in a tailwind industry. Now everybody is looking at investing in ETF, and they are the ETF, MSCI ETF provider, right? As long as any fund want to build the ETF to model after MSCI ETF, they have to pay them a fee already. Or they want to get their ETF data, they have to pay them a fee. And that is a tailwind industry. Because do you agree with me that now a lot of people is looking at ETF? Yes or no? Is a lot of people looking at ETF? Yes or no? Type in the chat. Yes, right. A lot of people are looking at ETF right now. Okay. So there's some, like healthcare, transport, financial service, your AI, your e-commerce, all these are tailwind industry. So look at tailwind industry, look at growing sectors. So you look at growing sectors, your risk is reduced. You're not fighting against the wind. Okay. And finally, it boils down to valuation. You do not want to overpay. That's the last thing, right? Because I tell you, right, a great business is a bad investment when you purchase at the wrong price. So let's take a look at this company, Coca-Cola. So if you see, let's say you buy Coca-Cola in 1998 at the peak of the valuation, you can see over here, the share price was 43, right? But the valuation was 54. So if you have bought there, it will take you about 14 years until here to break even your initial investment in Coca-Cola. So let's look at that point of time in 1998. What's the valuation of Coca-Cola? So you can see at that point of time, the average PE was 30 times, 30.8, 10 years average, right? But when you buy, it's one standard deviation above the means, and even higher. So this is almost like 2 standard deviation above mean. So the valuation is very high. Okay? So even companies like Coca-Cola, so good company, also take you so long years to break even because you pay at the wrong price. Okay? So as long as, that's why I say, ask you to look at the 10 years average. As long as you buy at the average, right, or below, your chances of making money is too high. So let's say Coca-Cola, you didn't buy this one, you buy at 30 times. You buy at 30 times for Coca-Cola. You still make money, I went to check. You buy at 30 times at the point of time. You will still make money. Let's say back in 1995 you buy earlier. You will still make money even though you go through the crash and all this. You're still going uptrend. You're not like this. You go down then take a long time to go back to your peak. So the key to even further reduce the risk is don't pay above average 10 years PE. And more important, don't pay above one standard deviation above average. So as long as you don't pay above that, right, your chances of making mistake is very low, and you manage your risk very well. So just average and below. Do you agree with me? Yes or no? Right. This one, if you've gone through the valuation premium training, I shared a lot of case study that you buy on top of this. in the end, you don't do very well. So that's why I say you want to reduce the risk, you must buy average and below. Okay? So let me show you some example of companies that we shared during 2022, right? During one of our Alpha Lab webinar. Okay? So during one of the Alpha Lab webinar, we said, okay, now a few of the Alpha Lab, I said Amazon is cheap. Okay, you buy Amazon. The time we buy is like 16.8% only, but I say it's cheap. But there's a lot of growth opportunity for Amazon. So if you have bought, if you are in Alpha Lab and you've been through the webinar, right? You have bought Amazon at a point time back in 2022. So 2022, you buy Amazon, until now you up already 102%. Okay? At that point of time, undervalued. Actually, Amazon until now still undervalued, even though it goes up 102%. So if you take CAGR return, we are about 43% CAGR for 2 years holding. Right? You just sleep and just let Amazon compound. You do nothing, 2 years, you up 100%. Because you buy at the right valuation. You buy good company, quality company at right valuation. Okay? So in Alpha Lab, we also share another company, Splunk, which is more of a special situation company. So we bought and said that, okay, this company is 61.4% undervalued. We told them back in November 2022, 61%. And everything is coming already. The cash flow is coming. They are reverting back. Okay? But before they can even revert back, which they already start to revert back, before they revert back, 1 year later, Cisco went to privatize them. So within 1 year, if you have bought the company, you up 77.63%. Okay, this is a special situation. Right? Because in Alpha Lab, we not only do compounder, we also do special situation company. We also do distress company. Okay, so for special situation and distress company, they tend to go up in higher returns. So that's why you see in 1 year, it went up 70%. Okay, because somebody come here and offer the price. Situational play. Okay. Then if you look at Visa, we also covered Visa back in May, one of the webinar, and we said that, okay, Visa is undervalued. I think it's growing cash to cashless. You can go and look at it. Okay, so if you have bought Visa at the point of time doing now, right, up 48.36%. Okay, so your CAGR gain is about 24%. Okay, that is roughly for the US markets in general, most companies. Okay, we also do share Adobe. I think some of you also bought Adobe. I do share Adobe and Amazon also in the Alpha Quadrant live webinar. So I believe some of you have bought. So if you have bought during that time, right, you should have up. Some of Adobe, the time we say that it's cheap, 38%, and still growing. Right, you should up about 52.32%. So your CAGR return is about 26%. Okay, but of course, recently we trimmed down our Adobe stake. Okay, because we felt that the competition for Adobe is a bit too strong. So we decided to trim Adobe down. Okay, so that was our take on the recent Adobe. So we actually sold off some of our Adobe. We didn't sold at the current price, we sold at a higher. So our we hold for 2 years, we up about 75%. So that's our gain for 2 years. Instead of 52, we up 75% for Adobe. Okay, because we bought at an even lower, we sell at an even higher valuation around here, I think, the 600 plus mark. Okay, so speaking about valuation, you all want me to refresh the Mama valuation today or not? Do you all want? If you want, just type yes in the chat. You all want me to review the refresh the Mama valuation, Mama stock? Okay, so I'm just going to refresh the Mama valuation. Okay, so let's start with Apple first. Okay, so if you have been through the course, I already told you, right, we are trying to exploit human emotion. You want to buy when it's either average or below. Okay, so right now, if you look at Apple, right, do you think Apple is expensive or cheap? Right now, you look at it. Look at the chart. Is it cheap or expensive? Based on this P chart. It's expensive, right? So that's why I can understand why Warren Buffett is trimming the Apple stock, because Apple is generally more expensive. Okay. If you look at the average, the entry value I calculate for Apple is about 132. So right now it's about 223. It's negative. Don't talk about PG. PG is above 2 times already. We told you want to buy at least 1.5 times below. That's our target, 1.5 times below. Okay, but we don't want to buy 2 times above. So if you look at Apple, it's already 2 times above. So I don't think it makes sense to buy into Apple right now. That's why Buffett trim it. Okay, so let's look at Meta. Okay, so Meta P right now around fair value. Okay, so you can see now it's about positive 4.5%. Okay, but I told you before, right, if you attended the Alpha Quadrant live webinar, I already told you Meta, right, I need at least 30% because the business not strong. It's not like Alphabet. Alphabet, plus minus 10%, plus 10%, minus 10%, I will buy one. Because I know the business is very strong and they got tier one industry. But Meta business, anytime can be wiped out on. So I need more margin for it. And if I want to invest in Meta, I usually will buy, they recover, I sell already. I don't want to hold for long term. Right? We also own Meta, so we bought 200 plus. Then we trim a bit around 400, and now it's 500 plus. Okay. Okay, the PEG, I don't think it's cheap. Okay, let's say Microsoft. So Microsoft right now, if you look, it's about fair value. Microsoft. Okay. So Microsoft intrinsic value now is minus about 4.5%. So that I would say fair value. Fair value is plus minus 5%. Plus minus 10%. Okay. But if I compare with their growth and their current PE, it's about 1.82 times. So I may not want to buy into Microsoft. Remember, I told you it must be 1.5 times and below. So we do the standard valuation first. Once it passes, then we do the PG. And the PG is like a confirmation signal for us to whether we want to go in. Because I don't want you guys to overpay for the growth. So we have a confirmation signal. So I usually look for at least 1.5 times and below. So for Amazon, I won't want to invest. But if you still want to invest in Amazon, I would say that just minimum, very small stake. No need to be big stake. Okay? So let's look at Amazon right now. So Amazon, we use price to cash flow because of the thing. Alphabet, I also going to change to use price to cash flow because they got a lot of exceptional items. So I'm lazy to adjust. I just use price to cash flow. So Amazon right now, you see, even though we have gone up, they are still undervalued, right? And right now, even because of the latest cash flow, they go up so much. So right now, the margin is like 31% margin of safety. If you look in terms of PEG, right, it's less than 1 time. So to me, I think Amazon is cheap right now. Cheap. It's worth looking at Amazon right now and hold it for long term. Even though, that's why until now, we still haven't sold Amazon. We're still holding it, even though we up already, right? Because it's still cheap. The valuation is still cheap, right? So let's look at Alphabet now. So Alphabet right now, around fair. Okay. So you based on the cash flow, you multiply, right? Now it's about plus minus 10%. Okay. So if you base on the cash flow growth, I think it's still decent. So I would say Alphabet is fair value. So even at current price, I may want to look at Alphabet and buy into Alphabet. Right. That's my take on Alphabet. I may want to look at. Right. So my take is Alphabet, Amazon. Okay. Because Alphabet very strong, very free moving, but except for ChatGPT now is really slightly affecting them, but I don't think it's a lot because they also have a lot of strong artificial intelligence. Okay. Which one do you like? You like Alphabet or like Amazon? Type in the chat and let me know. Okay. So let me have a quick summary of what you have learned today. So I talked to you about the current market valuation, where are the opportunity like. I talked about the Pico case where you instead of focusing on upside, you focus on the downside, right? Learn how to manage risk. You focus on buying quality company is another way to reduce risk as compared to just keep looking for distressed asset, which is much more tedious. And I also teach you the 7 quick steps to how to really look at the quality, interest, recession-proof thing. Okay, and also how to invest in companies with the right valuation. I told you don't overpay for it, right? Don't pay at average. Don't pay at one standard deviation above the means. Okay, don't do that. Okay. So yeah. So I think we have been this training about 1 hour and 50 minutes. I think most of you knows that we have this service called Alpha Lab. Okay. So I would like to share Alpha Lab with you guys today because we got this special bundle, right, that we're doing this year because some of you may have missed out the bundle, right? So this is the last for this year that we're going to do for Alpha Lab, the special bundle that we're going to bundle with additional cost that you can get for free, but people paid for it. Okay, so if you're okay for me to share Alpha Lab, can you just type yes in the chat and let me know? Okay, are you okay for me to share Alpha Lab? Okay, thank you so much. Okay, so I think most of you knows that we are not education company. We are investor ourselves. We invest our company. Okay, and and we do investment for a living one, and cannot cheat one, because from the way I analyze and I show you, you can see whether I know I don't know one. Okay, so when you want to join Alpha Lab, right, you are not only hiring me only, you are hiring 6-man team. Okay, our team is 6 people, me, Rusmin, Adam, and my 3 other analysts. Okay, so we are 6-man teams that do analysis consistently on a daily basis. So that is our bread and butter. We do it. Okay, so Alpha Lab is really to help you to semi-automate your investment research and help to build your watch list. Okay, so you know that we covers all this market, right? Your US market, Thailand market, Hong Kong market, Australia market, China market, right? The Asia market, the Japan market, Malaysia market, Singapore market. Okay, recently we add in the European market. So now recently we bought into our first Asia stock, and we also bought into our first European market stock. Okay, so just based on this 7 market over here, is already about 18,000 stocks. But in fact, because we add the European market and the Asian market, right, our number of stocks is actually 20 over 1,000 stocks. The universe that we're looking at. So we will comb through all these 20 over 1,000 stocks, right, to find the best growth stock for you. Okay, and of course we want to find those like asset-like companies, you know, with long runway, right, good management, right, good economy mode, right, and we find all these asset-like companies for you. So you not find them, but we find them for you. Okay, so when we talk about Alpha Lab, right, and I want to say is that this Alpha Lab service is not for everyone. If you know us at 5%, right, we don't want to try to package this thing and then we just stuff it inside your throat and say, okay, you must sign up Alpha Lab. No, okay? We need to tell you, right, this service is not for everyone, okay? Because if you don't find any value in this service, it does not serve the purpose, and that is not how we do business, okay? If you have followed us for 10 years, right, you'll know we never force you on, right? And we just show you what we can do, right? If you really find it's very value to you, it can help you to boost your return, and it's very useful to you, and it helps you to save time, we are there to serve your ability. We serve you with our best ability. Does it make sense to you? If it makes sense, right, can you just type yes in the chat? Okay? So before you even consider to join Alpha Lab, you make sure that you must pass these few criteria which we have set. The first one is, right, you must really understand the financial basic and fundamental, right? And you must be agree the Alpha Quadrant process, right? Do all of you agree the Alpha Quadrant process? If you don't agree the Alpha Quadrant process, there's no point, right, you go to join Alpha Lab already. Because Alpha Lab is basically using the Alpha Quadrant process, right? So you need to get your basic right. So if you are someone who is new to investing, right, you are also not qualified to join Alpha Lab. Okay? Why? Because in Alpha Lab, I got no time to teach you. Okay? We move very fast one. We move with the markets. And we invest very fast, and we handle crisis very fast. We handle crisis as a community together. So every time when crisis happen, you don't need panic because you got us, you got the community. Okay? So if you are new to investing, I want you to go and get your basic right first. Go and practice Alpha Quadrant until you're very good. Then you come back to us. Okay? If you still feel that your Alpha Quadrant basic is not good, right, don't come and join Alpha Quadrant. That's my take to you. Okay? So go get your hands dirty first. Okay? And you also must prepare to invest overseas. You will notice when it comes to invest for growth stock, it's not only Singapore market. It's more than that. It's really US, Europe, Asia, China, Asia, Hong Kong market. The other markets, they are bigger. They will give you more capital gains and faster. Right? You also must be long-term investor. You need to hold. Okay? Certain companies will hold. Certain companies will trim. Certain companies will sell. Okay? But most companies will try to hold. Core companies in the core portfolio will hold. So you need to hold good companies. Right? Imagine if you have seen us sold Amazon, then we won't get the gain already. So you need to, if the company is continue undervalued, right, even though it goes up 100%, right, you have to continue to hold it. Okay? You must have investable fund right now, at least $10,000. Okay? If you don't have $10,000 to invest, then you're wasting your time. Because why we put $10,000 is because I'm going to teach you how do you get back the money of your investment in Alpha Lab. Okay? And you also must be responsible for your own financial investment decision. Because at the end of the day, right, I'm going to present company to you. Right? But it's your job to decide whether you want to invest or not invest. Okay? I cannot force you and say, you must invest, you must invest. I only can tell you what I'm doing, this is what we're doing, and this is what we are buying. Okay? So you already know the service is called Alpha Lab. And of course, I always talk to you about, you need to build your target box. You need to build your watch list. Right? You don't wait for the crisis happen, and then you start analyzing. Because nowadays, right, the crisis is very fast. Do you agree with me? No? Nowadays, the crisis is very fast. Right? Your COVID pandemic recover in 1 month. Your trade war recover in 6 months. your 2022 crash recover in 6 months. So everything recover very, very fast nowadays. Right? The trade war also very fast. Right? So you got no time to analyze. When the thing happen, right, you must faster take action. Like the Hong Kong market, right? You don't take action fast, the market just go up, just ballistic upwards here, the Hong Kong market. Very, very fast. So you need to move very fast. You need to have a watch list. Right? So when the watch list happens, you just wait for the valuation only. Right? So we want to build the target box. So let me show you an example. Example, this company, Booking. So Booking.com has always been our watch list for a long time, but we didn't invest until what happened? Right? This company is strong, asset-like, cash flow generative. Right? But what happened to Booking in 2020? The COVID lockdown is once in a lifetime opportunity to look at Booking.com. They were whacked until like crazy. They were locked down. A lot of people think that Booking.com went bankrupt. Okay, they managed to raise some funds to strengthen their portfolio, and we think that they won't go bankrupt. Okay, the share price literally tanked 44.6%. So we think that the situation for Booking was temporary. So we invest quite a lot in Booking.com at that point of time. We make that bet. And what happened after 3 years? After 2020 until now, it went up 216%. So if you calculate my CAGR return for 6 years holding, 5 to 6 years holding is 26% for Booking.com, because we pay at the right valuation, we buy quality companies, right? That is the thing that you want to know. And we expect the COVID pandemic to recover in 3 years. Why? Because if you look at the Spanish flu, you must go and study history. So you go and study the Spanish flu history, right, which is the first pandemic, right? You also have all these lockdowns and things, right? It lasted for 2 years. So we took 2 years and add 1 more year. So we think that COVID will recover in 3 years. But in fact, COVID recovered in 2 years. Exactly same as the Spanish flu, right? So that was the gauge. So sometimes you need to study history. And Bruce Pei and I, we study a lot of history. And based on the history, you only can do calculated guess only. So that's what we did. Sometimes you're right, sometimes wrong, but at least we are not off too far away. Do you agree with me? Okay? So basically, right, Alpha Lab, like I told you, right, is basically one new case study every month, right? Every month, we run through the case study with business, management, financial valuation. We'll go through the business model, economic mode, growth driver, management, financial, and valuation. Okay? So basically, every month, one new case study. I got no repeated stock. That means no, I don't, let's say, example, I take out this company. Then 1 year later, I take out this company again. No, I won't take out. It's always new company every single month. Okay? So every month, one new company. You with us for 2 years, you're going to have 24 companies. You have 10 years, you're going to have 240 companies on top of the existing companies are already inside Alpha Lab. Okay? So what does Alpha Lab watchlist comprise of? So Alpha Lab watchlist comprise of not only your typical blue chip company, which a lot of people request, but also companies like IDEX, Invisible Line, Toro Company, Pool Crop, Amari Price Financials. All these are not your typical blue chip companies. They are your small and mid-cap stock, your OTC market group. Small and mid-cap stocks still have long runway of growth going forward. Okay, but we still also covers the all those blue chip companies because members still request. Okay, so this is how Alpha Labs watch list looks like. So right now we have about 70 over companies. 70 over companies, okay? And we are still adding every month, okay? So we combed through the 2,000 over stocks, and we found these 70 over companies, but we are still fighting because it's never ending, because some stocks were still there, some stocks were delisted, right? So, example, like Splunk, they delisted already, right? So some stocks we sold also. And some stocks we feel that are no good, we sell, then we clear off. But we will add new companies every month, right? So all these are all your value growth, your growth stocks, right? Stocks that give you potential gain over a long period of time. So basically, to summarize Alpha Lab, right? You are basically leveraging our time, right, to do research for you. Okay? So if you look at Alpha Lab right now, okay, so this is how Alpha Lab looks like. Right? So inside Alpha Lab, right, we have this, the latest one is Amari Price. Right? So this one is covered by me. Okay? So this is a very, very good fee-only advisor company that compounds 20%. And this one, I can tell you, the business is okay. Decent business, can grow on. Asset management and fee management business, okay, can grow, easily grow revenue, okay. But this one, you remember doing the management segment in webinar live Alpha Quadrant webinar, I talked about management 1, 2, and 3. Right? This one is management 1. That means the management very good at capital allocation. Okay, this one, Lifeco, is a Sweden company that do serial acquired and they did very well. ARM is the AI company lah. They basically do the mobile chips and all this. Okay, so inside you have all these different companies that we covers. Kazakhstan company also covers Snowflake, ASML, and a lot of other small and mid-cap companies, AI companies, all this. Okay, so if you go into Amari Price, you can see we actually covered the business model. I covered very in-depth the business model, the economic mode, the growth driver. I talked about how good the management capital allocation here. Then finally, I do the valuation. I told you what kind of price that I'm looking at for this company. Is it expensive or cheap and all this? Okay. So on top of here, you can see we have the portfolio. We got the US portfolio, Asia portfolio, Europe portfolio. Satellite portfolio is where I talk about special situation and distressed assets. So like example, the Pico, Splunk, and all these they are all at satellite. That means all these special situations give us short amount of time, but give us very high return as compared to the normal compounder, right? But a lot of work. Okay, so that's all in the satellite. Okay, then you have the intrinsic value table where you can see, tell you which company is cheap right now, expensive. Okay, and also the forum, the meetup, all the past video in the meetup is all there already. Okay, so if you go to the forum, you can see how you can ask the general Q&A. Okay, then you have all those different companies that people ask questions. So for instance, let's say example Viva system. Right, if you are someone who do not like to track stocks, right? We track for you, right? Especially all those in the core portfolio, we track them on a quarterly basis. Okay, those that is less interest or not in the core, right? We usually track them on half yearly or once a year, because some of the company they're too strong already. No need to check them quarterly. Once a year track them is okay one, right? If the share price drop, then we go and track again. Okay, if the share price don't drop, there's no drama for this company, so no need to keep tracking on. But those in the core portfolio will keep tracking on a quarterly basis. So you can see I covered the Viva. Then someone can ask me, okay, the intrinsic value drop, why? Okay, then I say because of the cash flow drop. And they say, is it a concern? I say it's not a concern, right? Because some operating activities and all this, I don't think it's a concern and all this. Then some members, they are very good. They will share articles about the company also, which is very good. And on top of that, sometimes people ask me, for instance, you see, got this member ask me, okay, Bryce, he asked, because recently IDEX dropped quite a lot. So I say, does this counter look attractive at current valuation? Because now it's at around, I think, 1 standard deviation, right? So I went to check and look at IDEX. I say that, okay, Bryce, I think the fundamental is intact. Okay, it faced some headwinds due to weak consumer sentiments and staffing challenge. So I view this issue as a temporary, I say, okay? But based on the 10 years average, right now they're about 20% margin, okay? But I think I told him based on PG is a bit higher. I want to look at least 1.5 times below. So I told him that, okay, at least 30 times. So my entry value my first purchase price for IDEX will be about 310. So right now it's about 410. So still need to drop another 100 more, then I'll buy. Okay, so that's how we cover inside Alpha Lab. Okay, so the intrinsic value table, and on top of that we also do meetup, be it live meetup or be it webinar twice a year. Okay, so that is my promise to you, twice a year. Okay, so the coming meetup is on this coming 19 November. It's coming. This one is a live meetup. That means you go to physical venue, you see us live, and we update the portfolio live to you, or we have any discuss, any opportunity, also do it there for you. Okay. Okay, if not, you cannot attend, don't worry. We will record the whole session and put it in the meetup segment. Just now I show you, right? All the past record. We cannot fake one. Everything we meet now is all down there one. So you go through all from the day one we run until now, right? You can see, right? All is recorded one. Cannot fake one. If we result no good, nobody will try us already. Okay, so it's all proven. We put the evidence all over there. We never remove anything, and members also track us very tightly also. Okay, so my promise to you is twice a year, but of course, if any crisis happen, right, we will ride you through the crisis. And that's what happened in the COVID pandemic, the 2022 crash also, we ride them through. Okay, so the COVID pandemic, right, that 1 month we already do 2 webinars, right? That 1 year we do 6 webinars. Because you need to cover through, because a lot of people scared. So we pacify them, We are like counselor, when crisis happen, we counsel you, hey, don't be upset. It's an opportunity. This you should look at this. Look from another perspective. So we are like counselor for you. So you got the whole community with you. So you're not really scared of it. Okay. And on top of that, you also are able to access the $1 million portfolio of the Alpha Quadrant. You saw all those like Europe portfolio, the all them add up is a 1 million portfolio. Okay, so they'll run through all those companies that pass all these criteria, right? Asset light, scalable, recurring, white mode, long runway, minimum risk, good management, financial, buy and fair or undervalued. Okay, but of course, in the event where there's no investment, then we just build up cash. Okay, but there's always investment. Every year we buy companies. Okay, so basically when we buy and sell companies, we will email you, so you know what fifth person is actually buying and selling. Okay, so like I told you, we got the US portfolio, we got about 11 stocks, Asia portfolio 4, Europe portfolio 1, the satellite portfolio, right, which is makes any country, right, is about 5 stocks. Okay, so the satellite portfolio is more like special situation, catalyst play, distressed asset is all there. Okay, the one that I show you, that Pico, all this, it's all there. Okay, so if you know, we also have been buying Google for a long time, the Alphabet, right? We bought them first in the tech sell down in 2019. We topped them up further in 2020. So our average price for Alphabet is about $51.3, right? Since then until now, we're up about 200+%. Okay, so everything you're going to get, the full research, 70 over companies, right? 2,997 monthly research, one new case study. I won't repeat. You'll run through all the business management, financial valuation. You got the Alpha meetup twice a year, but of course, I promise, like I say, during crisis, we'll write you through. So no need to scared. Any crisis happen, no need to scared. Okay? We got the Alpha portfolio that you can follow what fifth person is buying. Total value is 8,479. Okay, but of course, that is the total value. Okay, the Alpha Lab investment is actually 2,497 for a 2 years subscription. Okay, but I need to repeat this. This is not for everyone. Okay, if you are newbie, this is not for you. Okay, but if you are someone who have been investing for some time, you know what you're doing, you know stocks, and you want to save time and save effort to look for great companies, right? Then Alpha Lab is for you. We are there to write the journey together with you. Okay, so like I say, why need $10,000 ROI again? Okay, so it's all about capital gain. You just $10,000, you invest in one company, the capital gain, or 3 companies, right? The capital gain can cover your investment in Alpha Lab. So for instance, we covered MasterCard back in 2017 for $105. Since then, MasterCard go up 383.9%. Okay, so basically your gain is 38,000. You invest 10,000, your gain, not your, plus the 10,000, your gain is 38,000. So easily covered your investment in Alpha Lab. Okay, and MasterCard is still growing, right? The cash to cashless. Okay, we also covered iFast in 79 cents. A lot of the member bought. They hold it until 10 times and they sold. But we didn't. We about 2 times like that we sold already. And we went to switch to their competitor. And the competitor also double up. So literally we about 2 times, we up about 8 times like that. So we took the money and buy into the competitor. The competitor also double up also. Okay. So if you invest 10,000, you hold until now 80 over 1,000. So the time when we buy into iFast, it's also distress. They're having distress. People are afraid of them. So we go in and say, hey, actually it's not as bad as you think. So that's why iFast, you see, it go up so high. Right? Another company is this company, Trade Desk. A lot of people don't know. The top 2 players, Alphabet and Facebook. But among the smaller players, the top player is Trade Desk. So we covered Trade Desk about 1977. So they are big fish in a small pond. Up about 500% if you hold until now. Right? So your gain about 10,000 invest, you get 50,000 gain. So easily covered your investment in Alpha Lab. Okay? So if you look at Alphabet, I show you, right, we invest Alphabet from 2018 all the way until 2024. Right? Our gain is about 236%. So our CAGR return for that 5-6 years about 22%. Okay? And what I'm trying to tell you is not just about the gain, but how can you earn those gains with minimum risk? Okay? By buying into great businesses that have long runway, that's asset light. Okay? And on top of that, for this year, okay, I don't know whether we're going to do it next year, but for this year only, right, at this moment, just for this year only. Next year, I cannot promise you. For this year only, we are doing a special bundle. Because last time, I do have this bundle, but now I got this bundle. This bundle is, recently we launched a course called Alpha AI. And people paid for this course. Okay? And now we all know that the fastest industry is all the artificial intelligence. So in this Alpha AI, we'll talk about AI, NVIDIA, ChatGPT, Microsoft, and how you can make money from it. We'll talk about all the AI companies inside that you can benefit from this AI game. We will share with you the intrinsic value of all this AI. Okay, we already gone through the course and the live webinar we recorded. So when you go in, you sign up for Alpha Lab, right? You have free access to Alpha AI, right? To Alpha, you have free access, right, for Alpha AI. Okay, and you can access and see the video from there. Okay, all the things about AI is complimentary, free for you for life as an Alpha member, as long as you're Alpha member. Okay, and we will update as the thing progress. Okay, sounds good if you're Alpha member. Okay, so some of you have paid for the Alpha AI, I know. Okay, so for those who have paid for Alpha AI, if you want to join Alpha Lab, do drop us an email. There's a discount for those who have joined Alpha AI. Okay, there's a discount for you, so don't worry about that. Okay, so that means the fee is lower when you paid for Alpha Lab because you bought Alpha AI, so we give you a discount. Okay, you just have to email in only. Okay, so for Alpha Lab, right, you cannot sign up today. Okay, as in you can sign up today also, but I also want you to think. Don't need to rush. Okay, but if you think you're ready, you can sign up. Then today you can sign up. Okay, but you know you rush. You got today up to this coming Sunday because this is the last Alpha Lab opening for this year already. So if you miss this year, you have to wait for next year, half of the year. If from now until next year there's a crash, right, we cannot write the market review. Okay, if you want to write us the market review, which you look at US market, it's very high right now. You don't know whether it's a crash or not. You want to write us, right? Then you should look at the joining us today, right now. Okay, because you don't know how the market will flip. Okay, so watch out for an email. Okay, if not, I repeat, you're going to get your full 70 over companies. Right, you got the monthly research. Right, one new company that run through business management and all this. Alpha meetup twice a year. On top of that, we'll write you through all the crises. Alpha portfolio, see what 50% is buying and selling. Okay, so it's a 2 years investment. You got now all the way until 10 November. But those who are ready, now you can straight away sign up also. Okay, to think about it. Okay, so you just go to this link called alphaquadrant.com/alpha. Okay, so those who are ready, you can go and sign up. If you sign up, you can type in the chat and let me know that you have signed up for it. Okay, you say I'm inside the chat if you have told me. Okay, if not, I like to answer some questions over here now. Okay, so I think some of you have some questions here. So Glenn said, is booking good night now? Nope, booking is not good. Evan said, did you manage to spot Palantir? No, we didn't buy Palantir because we only buy into profitable companies. Palantir was not profitable, so we didn't spot it. So we don't look for non-profitable companies, very few. We only buy profitable companies. Okay, that's why we are able to avoid the 2022 crash for a lot of the non-profitable company. They make 90% losses. Darren say, if you minimum 10K to start, does Alpha Lab shows how to allocate that money? Yes. When you come for the live webinar, all this, I will tell you, okay, what are we buying and all this, what company you can look at. So it's up to you to decide which company you want to buy. How many stocks in Alpha Lab? So we're going to cap it at 25 stocks. So all the US stocks, Asia, European satellite, all add up is going to be 25 stock max. Okay, we can't track so many stocks, but got some stocks we buy and some we also sold. So not every company you can hold for long term. Some you buy and you situation pass, you sell already. Okay, like I repeat, those who sign up for Alpha AI, right, you can actually just drop us an email. We will give you a discount on that. Someone say, is Alpha AI now already available on Alpha Lab? So those who are on Alpha Lab, we will give you a separate login to Alpha AI. Alpha AI is on another site. Yeah, for those who have bought Alpha AI, if you want to join Alpha Lab, right, you better email before 10 November because after 10 November, we're going to close Alpha Lab for the year. So the next time you're going to see Alpha Lab, right, is opening will be next year, I think July or August. XY say, what do you think about Nova Nordisk? I think it's a good company, but I haven't seen the valuation. That time when we see was quite decent, but right now I'm not so sure. Danny say, how about Singapore Airlines? I am not very bullish about Singapore Airlines. I never liked the company. Palantir is only profitable now. Palantir just turned profitable, okay? But that time when I look at it, it's not profitable. Because it's profitable, that's why the share price went up, okay? But the time when I look at it, it was not profitable. Does Alpha Lab consist of Hong Kong stocks? Yes, we have Hong Kong stocks also. We also got China A share. Okay, so basically the Alpha Lab is going to be 1797 for 2 years. And for this year only, we got the Alpha AI. Next year, I cannot promise you because I have to see what my team, whether they want to continue to include or not. Okay, but for this year, confirm those who sign up for Alpha Lab will have access to Alpha AI. Okay, Liping asks, how do you manage Forex risk? So like I always say, so we go to countries, where they don't move too much with our home currency one. Okay. But those that move a lot, like for instance, Singapore and Malaysia or Singapore and Indonesia, those we will still invest, but we will exit one. There's an exit plan. So you go in and we come out within a few years. So then Forex is not a concern anymore. So what is the Alpha AI content about? Alpha AI is basically all AI stocks, all the AI stocks, all the AI value chain. They teach you about AI, the different value chain, the whole industry basically. It's an industry course. That means Rusmin and Edmund to do in-depth analysis of the whole AI industry and tell you, okay, which one should you look at? Which one are just fat? Which one are real companies that we can profit? So we just tell you that. Okay, KR said, is Hong Kong land still undervalued? I think currently, even though they move out, they are still cheap for Hong Kong land. Okay, watch out for next week. Next week, we're going to have a video on Hong Kong land coming out for a webinar. Do watch it. We also share an alternative idea to look at instead of Hong Kong land. So you do watch out for our next webinar. Keep you in suspense. Okay, so Wayne asked, what's the renewal? So the renewal for the next 2 years after you finish out is less than 1,000. Okay. Okay, NYX sign up. Thanks for joining. I'll see you in Alpha Lab meetup. Okay. Evan say, I'm a newbie, don't join Alpha Lab now. Can I join? Yes, please do not join now if you are new. Okay, go and practice first. Okay, don't join. Okay. William also sign up already. Thank you, William. Thank you. I'll see you in the live meetup. Do come and say hi to me. Okay, I hope. Ting Pui also joined. Thank you so much. I hope by the time my voice recover in next week or next week. Okay. So any more questions? If there's no more question, I would like to call it a day because it's very strained on my throat right now. I'm speaking very painfully. So I'm sorry about that. I hope you guys understand. Okay. Christine said keen on Alpha AI. Okay, Alpha AI is closed for the year. So you have to wait until next year to join. Okay, I can't remember what's the purchase price. I think it's 300 plus or 400 plus. I can't remember. It's around there. Okay. The Alpha Lab is 1797 for 2 years. Okay. Thank you so much. And I hope you guys gain value from this webinar. And for those who join Alpha Lab, I'll see you live in the Alpha Meetup. Okay, do come and say hi to me. And thank you so much. And I see you again. Bye-bye.